Welcome back to Refreshing Careers. Today we are going to do the part 2 of the MCQ series of central banking. And the first question of the day is, name the financing device. Name the financing device that permits an existing loan to be refinanced. So you have to name a financial device that is permitting you to convert an existing loan, that is to refinance an existing loan, and then new money is to be advanced, and new money to be advanced at an interest rate between the rate charged on the old loan and the current market interest rate. So name the financing device that permits an existing loan to be refinanced and new money to be advanced at an interest rate that is in between the rate charged on the old loan and the current market interest rate. Is called as wraparound loan. This is a kind of loan. Okay, there are different types of loan, right? So this is one of the types of loan which is very risky. So let me explain this with an example for more clarity. I'll take the example of a house. Now let's say in the year 2020. Okay, we are in the year 2020. I want to purchase a house. Okay, Okay, the value of this house in the year 2020 is 10 lakhs. Okay, and I do not have 10 lakhs. Okay, So what do? I go to the financial institution. I go to bank. Okay, and I tell the bank that I want 10 lakhs to buy this house. Okay, they provide me 10 lakhs at the rate of interest of, let me say 10%. Okay, at the rate of interest of 10%. This is what the bank says. Usually bank doesn't give the entire amount. Like if you're asking 10 lakhs, you might give lesser. But in this example, let us consider that the bank gives us entire 10 lakhs. They're giving us this 10 lakhs at the rate of interest of 10%. Okay, so this is the transaction in the year 2020. Now, in the year 2021, I am bored of the house. I do not like this house anymore. I feel that this house is very unlucky for me. And by the time it is 2021, the value of this house is not 10 lakhs now. The value of this house is 20 lakhs. There's an increase of 10 lakhs. There's a lot of development that happened in 1 year, due to which the value went up to 20 lakhs. So this house in 2020 was 10 lakhs when I purchased, for which I borrowed loan. Now it became 20 lakhs. And now I don't want this. So what do? I sell it to someone. Okay, I plan to sell it to someone. I find Mr. C. Who is in love with this house. And Mr. C wants to buy this house. Okay, but he doesn't have sufficient amount. Okay, he cannot pay me this 20 lakhs. So what happens? In this case, I tell him that, okay, don't pay me entire 20 lakhs. Instead, you take a loan from me. The way I am paying to the bank, you pay to me. That is the way I am paying 10 lakhs, the rate of 10% to the bank. You pay me 20 lakhs at the rate of, let's say, 15%. Okay, you pay me 20 lakhs at the rate of 15% is what I'm going to say, Mr. C. So here what the advantage happening? This amount is more. Okay, the interest that I'm collecting, that is, I am paying an interest of 10 lakh, but I'm receiving an interest of 15%. So 10%, 15% difference is of 5%. So there's an extra amount of 5% that I'll be getting. So in this way, there's its benefit. And there's another benefit. The other benefit is this 20 lakh. Initially, I paid only 10 lakh for which I took a loan. I have not yet paid. I have to pay it. So I've taken only for this 10 lakh. Now, I'm going to receive 20 lakh. 20 minus 10, again an advantage of 10 lakh. So in terms of interest rate also I'm getting benefit. In terms of that also I'm getting benefit. This rate will usually be greater than this particular rate. Okay. The reason is, let's say that the interest rate in the market in the year 2021 is 20%. Just an example. Okay, interest rate is 20%. Okay, as we studied in the definition, the rate of interest is in between the rate charged on the old loan and the current market interest rate. The rate charged on the old loan 10% and the current market rate is 20%. So I take somewhere in between 15%. So I have to pay 15%. This is the advantage that I am going to receive. This is called as, the entire process is called as wraparound loan. Here what is happening? I have borrowed an amount of 10 lakhs and have not yet paid that 10 lakhs fully. Let me say that since 1 year has passed, okay, the interest for 1 year is how much? 10 lakh into 10% is 1 lakh. So I would have paid 1 lakh to the bank, right? 10 lakh is the amount. 10 lakh into 10% is equal to 1 lakh. So by 2021, okay, by 2021, my remaining loan is 9 lakh at the rate of interest of 10% only, right? So my remaining pending amount is 9 lakh. The rate of interest is 10%, but this is the contracted rate. So here the amount remaining is 9 lakh. Let us assume it is 9 lakh. Okay, calculations are not exact. Just for understanding, let's take it as 9 lakh. So here what happens, what I am going to do is, I am going to tell Mr. C to pay me monthly installment of some amount. So he pays me monthly installment of, let's say, 10,000. Mr. C is paying me 10,000. Mr. C pays me 10,000 and to the bank I have to pay, let's say, 5,000. So the remaining amount is how much? 5,000. So every month I am earning 5,000 extra. Hypothetical example, okay, this is hypothetically I am taking these figures. Let's say that Mr. C gives me 10,000 every month because he has to pay me some amount every month, like EMIs. Okay, he is paying me 10,000. 5,000 is what I have to pay to the bank. So I take 10,000 from him. I pay to the bank 5,000. Remaining 5,000 is mine, and this process continues till the time he finishes paying me the entire amount. By then I would have even finished paying my 9 lakhs to the bank, and afterwards the entire 10,000 that he keeps giving me will be my income. So that 10,000 becomes the profit that I am getting. This transaction is called as wraparound loans. Okay, let me just summarize because this is a little confusing. Wraparound loan is like in the year 2021, the remaining amount is 9 lakh. Okay, this old amount is wrapped. Old amount of 9 lakh is wrapped with the new amount of 20 lakhs. Okay, so I will be paying 9 lakh with the amount that I'll be receiving from C. So right now, C might be staying in that house, but that house is still in my name and the bank still can take control of the house. If I fail to pay the money, the bank can sell my house because they have the papers, because still I haven't paid the loan. So there are a lot of risk in that. There's a lot of risk in this wraparound loans. So wraparound loan means that old loan in the sense is not like entire 10 lakhs. That is the remaining amount of the loan in the year of consideration, that is in the year 2021. Remaining amount is 9 lakh that has to be paid to the bank. So I have to pay 9 lakh, and this is the amount, this is the new loan. So 920 will get wrapped. Okay, and I will pay my 9 lakh using the amount that I will be receiving from Mr. C. And at the same time, the interest rate that is being charged will be somewhere around the interest rate that prevailed in the year 2020, that's 10%, and the interest rate that is prevailing in the year 2021. So it is 15%, somewhere in between. Okay, so this percentage will always be higher than the previous percentage, because it will be, majority of cases it will be somewhere in between. It is always going to increase, right? That's why this will be higher. This is called as wraparound loans. This is called as wraparound loans. So let us read the definition now so that you get even more clarity. So wraparound loan is a financing device that permits an existing loan, that is 9 lakh, to be refinanced and new money to be advanced. New money is 20 lakh. This 9 lakh is getting refinanced and new money to be advanced, that is, new money is 20 lakhs. New money to be advanced at an interest rate that is in between the rate charged to the old loan, that is 10%, and the current market interest rate, that is 15%. That's called as wraparound loan. Okay, the next question is, how many member countries own the IBRD? How many member countries own the IBRD? What is IBRD? IBRD is International Bank for Reconstruction and Development. International Bank for Reconstruction and Development. There are how many nations in IBRD, or how many member countries own IBRD? The answer is 189. 189 countries own the IBRD. Okay, International Bank for Reconstruction and Development, which was formed in the year 1944. Which was formed in the year 1944. Okay, it was formed like the World War ended in the year 1945. So this particular organization was formed in the year 1944 so that it could help in the reconstruction of the nations which were affected by the war. So that's how you can remember this. The war ended in 1945. This was constructed just a year before the war ending, that in the year 1944, so that they could help rebuild certain European countries which were damaged. Okay, which are damaged, which required reconstruction. For the reconstruction of European nations, they used to fund. Now the next question is, IBRD provides loans, guarantees, risk management products, and advisory services too. The answer for this is all of the above. The answer is all of the above. That is, IBRD provides loans, guarantees. See, these are the products of IBRD. So you should be knowing this also. IBRD provides loans, it provides guarantees, risk management products, and advisory services to who and all. The first is to middle income countries and to credit worthy low income countries. To middle income countries and credit worthy, not to all low income countries, but only to the credit worthy low income countries, middle income countries and credit worthy low income countries. The next question is regarding IMF. What is the headquarters of IMF? The headquarters of IMF is in Washington DC. The headquarters of IMF is in Washington DC, and the headquarters of IBRD is in Washington DC. IMF and IBRD, both the headquarters are in Washington DC. How many member countries are there in IMF? Number of member countries in IMF. The number of member countries in IMF are 190 members. So totally there are 190 members in IMF. Okay, there are totally 190 members in IMF. Again, there's few more facts regarding IMF. Okay, let me show you it. Okay, in IMF headquarters, we know headquarters of IMF is in Washington DC. So that thing you have to remember. Headquarters in Washington DC, and the year of establishment. When was it established? IMF. It was established in the year 1944. Okay, IMF also was established in the year 1944, same as IBRD. How many member countries? It has 190 member countries. IBRD had 189. This has one more. So 189 plus 1, this has 90. So IMF has 190, IBRD has 189. Okay, and establishment year is same. 1944, headquarters also is the same. Now what IMF does? Okay, IMF does lot of things. First, let's talk of how it finances other countries. We would have heard that IMF is financing. IMF finances, right? It gives loans. How is it giving loans? How is that IMF is giving loans? First thing which is done is that it gives finances. The IMF resources mainly come from the money that countries pay as their capital subscription when they become members. Each member of the IMF is assigned a quota based broadly on its relative position in the world economy. That is basically initially, right? Initially, when they subscribe, initially when they join as members, they pay some amount. This creates a pool like this. All the countries, all these 190 countries are paid some amount based on their position in the world economy. So countries can then borrow from this pool when they are in some financial difficulty. That's how finance is arranged. The next thing which IMF does, that's the way finance is arranged. Next thing which it does is, as I told, lending. IMF lends. IMF lends. Yeah, many countries borrow during financial difficulty. You borrow from IMF. IMF gives emergency loans. The aim of IMF is to give loans to countries when they are facing some problems like balance of payment problems. So if any of its members facing such problems or are in some kind of requirement of some emergency loan, then they provide loans to those countries, to those member countries. So that is one of its functions. Next, surveillance. Next is surveillance. Surveillance. IMF monitors the international monetary system and global economic development, and it identifies the risks, and then it recommends certain policies for growth and financial stability. So it is looking at everything, it's monitoring everything, it is seeing if everything is growing, how it is growing, all these things. It sees all the developments that is happening throughout the world, and after seeing all that, it recommends certain policies, and it even identifies risks. So it's even playing the role of surveillance, right? So this also is one of the functions. So it provides finance, it lends, surveillance, capacity building. IMF provides technical assistance and training. IMF provides technical assistance and training to these member countries. Okay, and that way it is helping in capacity building. So it is doing surveillance, now it is doing capacity building also. So it is doing all these things, capacity development. It is engaged in capacity development. And next thing that it is doing is, most of the things are similar. Okay, so these are the main things that IMF does. Like its finance is arranged, I told you how it's arranged, by the subscription of the member countries. Then it lends to its member countries during times of difficulties. Then it even does the surveillance roles. It plays the role of a regulator, like how RBI finds out what all is the issue in the country, what is the risk and all. Even this also does the same, right? IMF also, like it looks at the world economy, it finds out the risk, and then it even suggests certain policies, right? So it's even doing this, and then it does the capacity development. It builds the capacity of member countries. It builds the capacity of member countries, okay, by explaining to them what policies they can adopt, what they should be doing in the present situation. So by providing advice, by identifying certain risks that is there in the world economy, they are helping. Okay, so these are the main things which IMF does. Okay, the sixth question is, SDR is an asset, true or false? It is true. SDR is an asset. SDR is an asset. Okay, let me mark this. This is the answer. Okay, the seventh question is, the SDR is an dash for IMF transactions with member countries and a stable asset in countries' international reserves. The answer for this is accounting unit. So the SDR, what is SDR? Special drawing rights. SDR full form is special drawing rights. The SDR is an accounting unit. The SDR is an accounting unit for IMF transactions. For IMF transaction with the member countries, and it is a stable asset. It is a stable asset in countries' international reserves. For example, if like India is having international reserves, in that reserve, SDR would be a part of those international reserves. Okay, so it is like an international reserve. Like how we have foreign exchange as an international reserve, similarly, SDRs also would be treated in the same way, and that also would be an international reserve. That's why they're saying that it will be an asset in countries' international reserves. Next, special drawing rights value is based on the values of world's 5 leading currencies, which are US dollar, and you have to name the four other currencies. They have told one of the currencies is US dollar, and they're asking you to say which are the other 4. Okay, SDR's value is based on the values of world's 5 leading currencies, which are US dollar, euro, yen, yuan, and UK pound. Okay, SDR is an asset. Okay, SDR is an asset as we saw, and SDR's value is based upon the values of 5 currencies, that is US dollar, euro, yen, yuan, and UK pound. The next question is, the global financial crisis 2008 mainly happened due to. What is the reason behind the crisis, behind the 2008 global financial crisis? The main reason was this. The main reason was that there was high default rate in the US subprime home mortgage sector. There's high default rate in the US subprime home mortgage sector. What is the full form of NBFC? The full form of NBFC, this is a very easy question, but we get confused if we just play around with terms like this. Here I've just written bank, here I've written banking. So the answer would be banking. This is the answer, non-banking financial company. The small things that we might make mistakes in. So the NBFC full form is non-banking financial company. Thank you so much. Please do like and subscribe the video.